Many investors have a problem with deciding to buy a growth company. I agree that it is not easy, but if you have identified the right industry and a company which will be a dominant player in that industry, just buy your first shares. Your strategy should be just to keep buying more at regular intervals. I will help you to identify such a stock. It is often a disruptor of an old industry. Such a company will use the economy of scale in the form that each next additional user adds value to such a network. Many people focus on economy instead of focusing on trends. They should think about where the world is going. The example is the transformation to the digital economy and greener economy. Then you should focus on companies which will benefit from it. What are the examples of such companies? Today I will talk about two such companies, PayPal and Tesla, but I will get to it later. First, let's talk about another problem for many investors. They look at the entry price and they do not want to increase their stake in a company because it will increase the average price they paid for their shares and it will look worse. But you need to know that percentage gains do not matter because you will not pay for your car or a new home with a percentage. You will pay with money. 2 weeks ago, I decided to add more Tesla shares to my portfolio. I had already owned Tesla shares with 180% gains from March this year. The average price was around $390, but it does not matter. I will not travel in time to buy more shares of Tesla for $390 or cheaper. I bought more shares for around $960 per share, and I'm happy with that. Overall, I am now a more significant owner of Tesla company than just 2 weeks ago, and I will participate and benefit from the dominance of that company in the future. When considering investing in high-growth stocks, it often does not matter too much if you bought them after the stock has already appreciated hundreds of percent. I do not wait for the perfect moment to buy such companies. I just add them to my portfolio regularly. So let's say you do not have any shares at all. It may work for you if you buy shares now for 10 to 15% of the final position, and you can just buy regularly each quarter another 10 to 15%. In that way, if the stock goes down, you will be happy because you can buy cheaper the next part of that position. If the stock goes up, your current shares have already appreciated. No one can predict short-term volatility of the stock market. The only advantage we can have is the selection of great businesses plus long-term perspective. I select businesses with the potential for doubling or tripling their market capitalization in 5 to 8 years. Does it matter when having such a perspective if you buy shares 5% cheaper? I do not think so. I think that Tesla cars are for Tesla what MacBook computers were for Apple company. It was just the beginning of Apple. It was their first product. MacBook users, through their choice of Mac computers, were showing that they want something different, something which differentiates them from others. Apple always strives to make things simple for end users. IBM seemed to hint at IT complexity, always underscoring how hard technology is to use. Similarly, Tesla is showing that things can be done differently with their approach to cars and energy management. Now we already know that Tesla is going to be a major player in the electric vehicles industry. Tesla is showing its ecosystem, their network of superchargers, solar panels, and solar roof solution, as well as their advancement in self-driving technology. Some people believe that personal opinions of Elon Musk will affect customers' preferences. They claim that because Elon Musk wanted a quicker restart of the production in Tesla factories, that will affect in discouraging many potential buyers of Tesla cars from the purchase. This theory says that because some people think that the lockdown should be extended and the view of Elon Musk is different on the subject, that will cause those people to buy another car. But I do not think it is the case. It is like with the iPhone. If the CEO of Apple said something and I do not share the same opinion, I would still use the iPhone, not the other smartphone, because of the benefits I get with it. I do not care too much about what the CEO of the company said. The customers care about what benefits they get from having that product. In terms of my Apple products experience, I finally do not care about reinstallation of operating systems like it was the case with Windows or Android. I receive the product which can work for many years. At the same time, I received excellent support lasting many years in the form of updates of the software. If you do not know what I'm talking about, just check some statistics about the consumer experience. Tesla cars provide similar benefits for their users, and that is why people buy Tesla cars. Not because Elon Musk said something or danced at the Tesla event in China. So no, Elon Musk's push on opening Tesla factories is not posing a significant risk that his words related to COVID-19 will drive away customers. Many people do not understand that with whatever Elon Musk says, Tesla gets free advertising. Elon Musk is a tech visionary who is getting a lot of following. Tesla is a company which has a lot of supporters, but similarly, it has a lot of haters. Does it resemble you, Apple? It should. But I will talk about these similarities between these two companies in another video. Subscribe to this YouTube channel if you do not want to miss it. It's easy to forget, but Tesla's original strategy was to introduce a luxury sports car, the Roadster, at a very high price point. The next step was to produce a luxury sports coupe, the Model S, at a slightly lower price point. And finally, a mass-market sedan, the Model 3, at a more affordable price point. Tesla is a famous brand. In fact, according to Brand Finance's annual Global Brand Report, it's the fastest growing brand in the world in terms of value, worth $12 billion in 2019, which is a 65% increase over 2018. What about the next 5 years for Tesla? Of course, I do not know the future, but I have quite a high conviction, confirmed by my research, indicating the high probability of Tesla stock at least doubling the current price in 5 years. But I do not know what can happen in the meantime, and I do not try to predict short-term volatility. The future looks optimistic for the Tesla company. So the second disruptor is PayPal. It's the leader of the online sales with its PayPal core platform, which has a growing user base of over 300 million. The current key growth trigger for the company is the Venmo app. CEO Dan Schulman said at a recent investors conference that the company aspires to have 1 billion people on PayPal platform. It is just an aspiration, not a prediction, but PayPal has added 143 million active accounts over the last 5 years. Schulman said that PayPal is going to move from primarily online to a combination of online and in-store transactions, and that will drive PayPal to 1 billion engaged users. The company has already introduced the Venmo debit card in 2018 and Venmo credit card in 2020. Another area of growth for PayPal is broader adoption of QR codes, which will simplify checkout experience. In China, for example, QR codes and mobile payments are the norms. You can pay through QR codes even on street markets. And you should know that PayPal acquired a majority stake in GoPay in 2019, which could play a significant role in its efforts to expand QR adoption. During a recession, household spending tends to slow down, but it won't stop entirely. And because social distancing is likely here to stay for a while, online shopping is the best way for many consumers to get what they need safely. In my opinion, the digital payment trend is just getting started. E-commerce was already expected to grow from 12% of all online US sales in 2020 to 16% by 2023. And these predictions were made even before the pandemic forced many of us to stay at home. And PayPal is one of the payment options typically available, next to credit and debit card payments. If you want to download the spreadsheet with the calculation of the valuation of PayPal and Square companies, click the link in the video description. You can have different assumptions for earnings growth. You can download this spreadsheet and tweak it as you wish to check what are values of these companies when you put your assumptions. Where is PayPal's strength? PayPal is one of the payment methods next to credit cards in the majority of digital payments. Do you know what happened in April? The company revealed that its daily transaction volume grew by 25% within the month. It was not about year on year, but rather from the beginning of the month to the end of it. At the same time frame, the company added 7.4 million net new active users. This is almost more than double the additions it would normally achieve in previous regular months. So you can see that there is a catalyst that is getting people to sign up for PayPal and use their services more often. PayPal has been approved to accept federal stimulus payments to individuals and businesses. Many people have used either PayPal or its peer-to-peer money transfer operation, Venmo, as a destination accounts for their stimulus payments, rather than traditional bank accounts. In summary, it is a growing trend. Many consumers and businesses increasingly rely on digital wallets rather than a traditional checking account. Both companies, Tesla and PayPal, still have a lot of growth before them. For now, I do not see the reason to sell my shares. I am closer to replace PayPal with a company with higher expected growth, but for now I will leave it in my portfolio. That is one of the winners of the current crisis. I have to admit it, I wouldn't say I like getting rid of my winners. The core of my portfolio is related to the migration to a digital economy, and as you could hear from my videos, these companies give a decent return. You are awesome that you watched until the end. My stock portfolio returns for the last 2 years are shown next to me. I have been beating the stock indices regularly. You might be interested in joining my exclusive investing community. You will get exclusive access to members-only content, learn via our Facebook private group, take part in our regular members-only live Q&A webinars, and get access to a library of past webinars. You will know all companies from my real portfolio of more than $300,000, and also you will be notified straight away when I buy or sell any stock. Thanks to my approach, you can spend a minimal amount of time on investing. The cost of Patreon subscription is less than Netflix subscription, and your future self will thank you for this investment. Visit patreon.com/stocksandfreedom or click the link in the video description. Let me know in the comments section if you own Tesla stock or PayPal stock, or do you plan to add it to your portfolio? I respond to every comment. If you enjoyed this video, make sure to subscribe and click the bell to receive a notification about a new video being published, or feel free to add me on Instagram, Stocks and Freedom, where I post my comments almost daily. Thank you so much for watching, and until next time, happy investing!